Morning, everyone. Welcome to our webinar this morning. I'm David Scholes, Director of Wealth Sales. I'll be walking you through this today. Those of you that haven't attended a Demo Day Wednesday before, as the name suggests, every Wednesday we sit down and look across our very broad ecosystem, and we'll pick a corner or a feature, and we'll do a bit of a deep dive, get into the weeds of it. So today, as the title suggests, the MPS universe will be talking about everything MPS, but more specifically, what is the MPS universe? It was a new feature, for want of a better word, that we launched back in August, tail end of the summer. And those of you that are familiar with analytics will be aware of our MPS directory. So we'll be talking quite a lot today about the differences between the directory and the MPS universe and the value the MPS offers, in addition to what you already get via the directory, and also how that data can also flow into the other corners of the ecosystem as well. How does that touch cash calc? How does it get into advisor asset, etc.? And more importantly as well, how does it surface within FinExcel? Hopefully you can all hear me. This is we've been using GoToWebinar for feels like an eternity. I think I've been using it for about 20 years. This is the first webinar we're using a slightly different system, so do bear with us. I hope this is working as it should. Like with any webinar, there should be a little Q&A section somewhere on your screen. So any questions you have throughout this webinar, my colleagues are waiting in the wings, waiting for questions. So feel free to click on the Q&A tab, ask as many questions you like. And they will answer that on the fly throughout the session. Any questions that are left unanswered for whatever reason, I'll make sure we check on that at the very end, just to make sure we leave this webinar without any questions left unanswered. Super, I'm just going to try and press share, bear with me. Share my screen. Get rid of that. Hopefully that will load up. You just have to let me know if that doesn't show, but I'm just going to assume you guys can see this main home screen. So before we dive into FE Analytics, I thought I'd just take a quick step back and explain our Nexus ecosystem, just kind of give you an impression of where this sits, a bit of context as well, bit of a sneak peek as well as what's on the horizon in the next few weeks as we launch this new platform of ours. So at the moment, a lot of you logging into your applications, whether you're using Cash Calc or Analytics or Advisor Asset or Command Deck, you're logging in separately to them. So this is our new login site that should be rolled out hopefully within a matter of weeks. So in time, you'll all be logging into this platform, the Nexus platform, and that in turn on the left-hand side has the ability then to dart into all of the underlying infrastructure, Analytics, Command Deck, Cash Calc, etc., and now Nexus AI, because the ambition of ours for many, many years has been to create one tool that does everything, all under one roof. I always say that you've got all these different disciplines you're having to master in the advisor world. You've got to do cash flow, you've got to do risk profiling, you've got to do suitability reporting, annual reporting, platform due diligence, MPS research, fund research, etc., a very, very long list. And we've always felt it's kind of on us to create a one-stop shop solution that does all of those disciplines in one place. So that was always the vision of Nexus, and that's what hopefully will be being launched, as I said, over the coming weeks. When you log in, you'll land on this screen. This screen will obviously evolve in time. And then on the left-hand side, you've got all of the underlying, as I said, applications that you can then use. But in this new world of AI, we're now building various different agents, this kind of agentic layer, this secondary layer that sits on top of those primary applications of ours, and each agent will do a slightly different job for you. So we've already got our meeting agent that's already live, so that will sit in every single meeting of yours, taking transcripts and the recording, and then you can then get it to spin up various different bits of content that then sends the data across the divide into Cash Calc. But equally, as you can see, over the coming months, we'll be launching these pretty rapidly. We've got kind of compliance, etc. Assistance. Also, in addition to that, before we just dive into analytics, we've just launched Command Deck, which we're incredibly excited about. So Command Deck is a kind of an aggregation tool, a data aggregation tool. So it takes all of the data from your CRM, it takes the data from your different platforms that you're using, the fund houses you're using, and pulls all that data into one place. You've got these beautiful visualizations of where your data sits. What advisors doing what, the efficiency of those advisors, demographic data, fee data, platform data, kind of granular data showing you where your AUM sits in terms of platform, but then data quality checks as well. So again, if you're bringing your data from the CRM and the platforms, it reconciles it on the fly to work out if there's any data that needs cleaning. And once it's clean, you can then push that right back to the CRM. And also reporting as well, so you can very quickly load up annual reports for clients en masse within seconds. So Command-X now being created, and again, that's wrapped up into Nexus. So once I'm in Nexus, I can very quickly float and move into these different areas. We'll touch Cash Calc today because we'll talk about how the MPS data can be pushed into Cash Calc. And then we'll also talk quite a lot about Advisor Asset as well, because that's now integrated into analytics. And you can pick up the MPS data in there. But I wanted to give you a very quick sneak peek about what to expect over the coming weeks and kind of give you a bit of a visualization of how this Nexus ecosystem is gradually coming to life. Let's get into analytics. Let's talk about MPS. So those of you that haven't seen analytics before, pretty simple tool to use. You only really use this one screen. You work and flow from left to right. And it's really the face of our database. You've got an enormous great database sitting behind this, hundreds of thousands of funds, sectors, indices, and all of that data sits behind this. And this front screen is really for you to tell it what you want the data to create, what data you want, and then what content to produce. So on the left-hand side, you're telling it what data sets you want to pull from the database. And then on the right-hand side, what you want the technology to do for you in terms of content. Do you want to create a chart? Do you want to create a table? Do you want to create a report? So everything you do in analytics really just kind of flows on that very basic logic: data, feature, create, or generate in the bottom right. Now, if you think of our database of hundreds of thousands of instruments, they're divided into what we call kind of legal structures. So in terms of universes, if I want to look for a fund or an investment solution, I want to look for either a unit trust and OEIC, an ETF, a life insurance bond, a pension fund, a hedge fund. We've got a brand new universe, which is obviously the purpose of this webinar. We've got the MPS universe, UK MPS. So everyone using analytics will now have that universe. You don't have to be permissioned with it. It's automatically available. So the moment I click on UK MPS and open up the management group, as if by magic, I've got all of the providers already in there. Now, we've been collecting MPS data since about 2015, when we first released the MPS directory, which again, a lot of you are probably aware of. And the whole purpose of the MPS directory was to try and surface MPS data to advisors. Back in 2015, the MPS universe was obviously quite embryonic. Obviously, most advisors back then just pretty much used funds, single manager funds, multi-asset funds, but there was a growing trend of more and more advisors using MPS solutions. And that was a bit of an issue for the systems like analytics, because we couldn't show the MPS solution. We could only show funds, and advisors could come on here and build those model portfolios manually, but it was a very manual process. And clearly those models changed generally every quarter. So advisors were having to go in there and change them every quarter and even try and back test all the history correctly. It was a complete pain. So we released the MPS directory back in 2015 to remedy that issue, to give you the MPS data plumbed directly into analytics, to the heart of it. So up until the MPS universe, the only way of getting access to MPS data was on this tab here under the Portfolio Tools tab. You went to the MPS directory, and you still do. And again, I'll explain during this webinar the differences and the different kind of value proposition between both. But I can then come straight into the directory. There's all of the providers. When we released it back in 2015, I think we had 5 of them. We've now got about 75 or 76 of them. So pretty much all of the MPS players are now on here. And I can click on any single one of them. It will give me a load of information about who they are, what they do. And I can then just click on, I've already clicked on Activate Me, but there's a little blue button down there that's saying Activate Me. You click on Activate, then it changes to Pending, and then Well Select will click on Enable. And then their data will be available to me in analytics. Now, most advisors, when we've run research on this, most advisory firms generally work with between 1 and 3 MPS providers. So generally speaking, broadly, most advisors are coming onto analytics, enabling themselves with 1 to 3 firms that they use, or MPS providers they use. And all of that data will then be available for them under that portfolio tab. So when I expand the portfolio tab, I've enabled myself with LGT Vestra, and I've got the FEI models in here as well. So the models sit in here. I can go and grab any model portfolio and click on edit, and you'll see that because I've enabled myself with that data, I've got access to all of their underlying holdings. So I've got a completely kind of transparent window into their investment proposition. I'm just opening up the portfolio here. So on the right-hand side, if they have 10 funds, 20 funds, 100 funds, doesn't really matter. You can see all of the funds they currently invest in today, 31 of them, including a pound sterling holding. But you can see all of the times they've made a change as well. So LGT made a change back in March, back in January, back in November, all the way. I can go all the way back into 2009. So all of those times they've made a change has been recorded. It's even their annual charge has been recorded as well. So if you click on the settings tab at the very top, automatically the annual charge is in there. So it just means that when I go and create a return series, and I go and create a performance graph, let's just do that over, let's just say 5 years. And this was always the problem 10 years ago. If you didn't have this hard-coded into analytics, you were having to build this yourself. And as you've seen, 31 holdings today, maybe 30 holdings 3 months ago, 25 holdings 3 months before that. To go into the system and manually add in all of those funds at those percentages would have taken almost a lifetime. So this is still saves advisors a ton of time, because within a matter of seconds, it's aggregated all of that data, reconciled all that data, knows all of the changes, knows the additional charges to levy as well. And what seems like a relatively simple chart is incredibly complicated, because again, you're basically gluing hundreds of models together with all those changes. So a chart that shows you all of the changes LGT have made historically, and I know that the performance is not just net of fund charge, but it's net of that DFM fee as well. So when I compare my LGT model versus my Parmenion model, I know I'm comparing apples with apples. So that's always been the directory. That's always been the value proposition of the directory, is it allows me to grab the MPS solutions that I'm currently using, that I've run my due diligence on. I've decided I'm going to be using LGT, Parmenion, and Tatum this year. So that's now all in analytics. Every single time I need to use that model, every single time I need to run a report or run a comparison or go to see a brand new prospect and propose a new model solution for them, if I need to run regular due diligence through the year to make sure the performance and volatility and everything else is in sync, that data is ready and waiting for me, which is wonderful. That's the value prop of the directory. Now, taking a step back to the MPS universe, if we already have that, then why bother creating the universe? Well, the problem with the directory is, as you've seen, I've enabled myself for the providers that I already use. But if I'm now in the market for maybe a fourth provider, or maybe someone that has a decent ethical proposition, analytics was never really set up for me to do that full-blooded due diligence on all the solutions. Or maybe I need to run full-blooded due diligence every year on all of the MPS solutions to ensure that I've got some paperwork to hand when the regulator knocks on my door and asks me why I'm still using LGT, Parmenion, and Tatum. The directory is not very good for that, because I have to enable myself for those providers, and I have to hope that they permission me, because why would they not? But I'm still having to wait for them to click on yes. And then theoretically, if I did that for 76 providers, I'd have a portfolio tab here of what is 1,500 model portfolio solutions, 95% of which I'll never use. I'm just simply using it for due diligence. So it was never really set up in a way to run due diligence across the entire MPS space. It was really set up as a way for you to manage and model out those providers you were already using. So that's why we've created the MPS universe. If I take a step back away from the portfolio tab and come back to the instruments tab and get back to UK MPS, as you can see, as if by magic, all of those providers are there. I haven't had to enable myself for them. Now, I'm not going to be able to see all of their underlying holdings, and I'm not going to be able to do much of the stuff on the right-hand side, like creating charts, tables, and reports. But there's loads of stuff I can do now. They sit on the left-hand side. I can run my yearly due diligence, or run due diligence on new solutions that I might be interested in enabling myself with the MPS directory. So if I go and grab any one of them, say 8 a.m., there's all of their MPS solutions. So I can go, actually, let's go and grab, who was I looking at earlier? Aspen, that's a good example. If I click on Aspen, all of their MPS solutions, click on this one and click on add, because these guys provide us with their documentation as well, which is quite neat. So if I go and add that, just like any other fund or index or sector, they will get added to this left-hand side. You'll see every single model portfolio has a little fact sheet icon. If you click on the fact sheet icon, this gives you their fact sheet, the analytics fact sheet of their model. I've picked these guys specifically because they provide us with some of their documentation as well. Now, we have got the plumbing to allow them to send us many different types of documents. Their rebalancing documents, their monthly fact sheets, I think market commentary as well, quarterly and monthly. So there's about 4 or 5 different documents MPS providers can provide us. Now, clearly, we've only had this for about 6 months. It will take time for the MPS providers to understand the process to send us documents. But you can see up here, these guys provide us with their monthly fact sheet, so you don't have to now. The idea is if I'm, but let's say I'm using Aspen, Timeline, and Vestra, rather than having to go to Timeline, Vestra to get their underlying documentation, given that I'm going to be in analytics most days, I shouldn't have to do that. This should be able to aggregate and collect all of those reports and documents I'm using. So that's kind of the promise of this, hopefully, is as in time we'll have more and more documents being pumped into the very top. As you'd expect with a fund, you can get a kids documents, a fact sheet, a semi-annual report, a prospectus. It's the same with MPS World. You should be able to get their documents through here as well. So as I said, the plumbing and the architecture is there. Just need the DFMs now to start sending us those documents. A lot of this information is obviously derived by us, so we don't obviously need to wait for them to send us the data. We create a lot of this stuff ourselves. You can see that every single MPS I load up, it will tell you what sector it's part of. I'll come on to the sectors in a minute because they're brand new MPS sectors that we've been able to create. Now we've got MPS Universe. Also, you've got the MPS Crown ratings pop up as well. This is really important. So again, I would imagine the vast majority of people listening to this have seen or understand our Crown ratings. There's a lot of heritage attached to them. I think we've had our Crown ratings for decades, certainly longer, further back than when I started 20 years ago. So we've probably had them 20, 25 years now. They've always been widely used by advisors for comparing the relative performance of one solution against another. We've never been able to attribute that to an MPS solution. And if you look out across the market, there's plenty of quant-based ratings for funds. There's probably about 4 or 5 of those. There's not really any quant-based ratings for MPS solutions. We already have a quant-based rating that we have for funds that uses all of the right metrics that you can just simply use on an MPS. So we've simply just copied and pasted the methodology and used it on the MPS solutions based on these new sectors we've created. So it looks at, going to test myself here, it looks at alpha, volatility, consistency, and performance over 3 years against, again, looking at the sector averages. And set percentages of those get 5 crowns, 4 crowns, 3 crowns, 2 crowns. And that gets rebalanced every 6 months, every January and July. So this was rebalanced a few months ago. You'll expect this to change in 3 months' time. So super useful. If I want to know how good this MPS solution is against a similar sector or a similar basket of other MPS, I've now got a Crown rating to give me hopefully a bit of a North Star to understand how it's performing on those 4 core metrics. I'll come back to those in a minute because they also feature in the filter. I've also got other information down here, AMC of the provider, how much the provider charges, annual charge, what the OCF is currently, and also the biography of the fund manager. At the bottom, also an object, whatever the objective of that model portfolio is. So again, I don't use Aspen at the moment. Maybe I've seen them on, I think quite active on LinkedIn. Seen them on LinkedIn. I've maybe had a call from one of their BDMs, so I want to do my own due diligence and kind of research on these solutions. I've already got quite a lot of information here just on one page on the fact sheet, but also then gives me the performance as well. So it gives me the performance of that fund versus its sector. So again, you'll see by the naming convention on these sectors, we're using growth assets. Basically equity or property content within those investment solutions. Historically, MPS solutions have really tried to compare themselves against, usually we see mixed investment sector appear quite a lot, mixed in the 3 or 4 different mixed investment sectors. A lot of MPS providers historically have used those as the benchmark. That's only been really because there is no MPS sector to benchmark themselves. So they've had to compare their MPS against the basket of multi-asset funds, which doesn't seem very clean and elegant. So that's why we've created an MPS sector. So when I'm trying to gauge the performance against a peer group, the peer group is a peer group of MPS solutions, not a peer group of multi-asset funds. And as I said, we've divided those up based on their equity content, quite similar to the way in which obviously the mixed investment sectors work to a certain extent. There are some fail-safes as well. So if an MPS solution falls outside of that, so maybe you've got an MPS solution at the moment that's got a 64% growth exposure, 64% kind of equity content. If it suddenly went to 67 or 68%, it would have to be above 65%, I think, for 16 consecutive weeks before it moved sector. So we have put these safeguards in place to ensure that models just aren't floating back and forth through different sectors. There has to be some sort of consistency. And we have strategically selected these particular percentages. If we did a lot of research into this. Had we have selected just set set rates of 20, 40, 60, 80. We found that most of the MPS solutions kind of clustered on those outer edges. So if you were trying to look at a 20 to 40 sector, you were essentially just comparing a load of models that either had 20% equity or 40% purposely put these bands the way that they are, because most of the solutions sit in the middle of that band. So when you're trying to compare the volatility and the performance of the solutions, it's more kind of apples and apples rather than apples and other fruit. I'll come back to the sectors in a few moments, but also because we now have sectors, it means we can generate quartile information, also rank within the sector as well. So underneath that, you'll get the cumulative performance, the discrete performance, calendar year performance, again, all with quartile information. Again, you were never able to get that without a sector. Also how risky that model portfolio is against its sector, and then the breakdown as well. So again, not the underlying holdings, because that's embargoed unless you get that via the directory, but the sector weight, the regional weighting, the asset weighting, credit weighting if it's got bond exposure, and also the growth and defensive split at the very bottom there. And of course, if I click on the PDF icon, I've got the Aspen fact sheets that I can use myself via analytics. I've just shown that, but now I've got this wrapped into analytics. I've obviously got my own branding up here, so now I've got my own fact sheet for the Aspen model portfolio with my branding at the very top there. Show me all the information I'd want to show maybe a new prospect or maybe a client that already invests in this model portfolio. I just want to give them a little review. So that's fact sheets. Back to this main screen, if I just close that down, you'll see on the right-hand side, you've also got this alert icon. This is exactly the same for funds. So had I have gone on the left-hand side and selected a fund or an investment trust or an ETF, I get these same options, of course. And alerts have always been quite popular in fund world. Maybe there are, I always use Vanguard Life Strategies as an example of this. So many advisors use LifeStrat. But I'm using them on a regular basis. I've got so many of my clients using Life Strategy. I'd want to be told if anything significant happens to those strategy funds, maybe if a rating got downgraded or maybe the charges started to creep up. I'm using LifeStrat because it's so competitively priced. So if they start increasing the costs, I'd certainly want to know that. How am I going to find out about this sort of stuff without having to do a lot of heavy lifting? Well, I don't need to worry because I can get analytics to do a lot of the heavy lifting for me. So whether it's a multi-asset fund, a single manager fund, or in this case, an MPS, I can go and ask it to kind of run daily checks for me. So if this solution ever goes up or down by 10% in terms of performance, I want to know. So if that was triggered, I'll get emailed. Fact sheet information, at the moment, the annual charge is X. So if that changes, let me know. Fund size is about 100 million. So again, if that goes up or down by a significant amount, let me know. OCFs, etc. And obviously, as I just said, the ratings at the moment, middle of the road, 3 out of 5, gets rebalanced twice a year. So just let me know when that gets rebalanced, what it gets rebalanced to. And then my email address will be down there, pre-populated. I can click on save and save as many of these alerts as I like. And again, just let the system do the heavy lifting for you. And each day I'll be getting those emails coming across, just keeping me updated. And that's probably part of my due diligence process to make sure I'm keeping an eye on these solutions that we're using for clients, or maybe on a bit of a watch list. I'm thinking about potentially using Aspen. Let's get them on the watch list where I can get regular updates on the performance, the charges, and the volatility of their solutions. One I missed actually was if they provide any new reports. So if there's a new fact sheet or a new review that they've updated, I'll get alerted on that as well. Let's just quickly go into, before I go into the filters, let's just go into the sectors. So under the sectors at the very top here, as you'll well know, we've got all of the sectors dependent on the universe you select. So if I click on the Unit Trust and OIC universe, you get the UT and OIC sectors pull through, same with pensions, hedge funds, etc., offshore funds. Exactly the same for MPS. Now you click on MPS, as if by magic, you'll get all of the sectors appear. This gives you a better view of those bandings, 0 to 15, 15 to 30, 30 to 45, not 0 to 20, 20 to 40, 40 to 60, again, because most of those solutions are clustered in the middle where you want them. And if you click on any single one of them, click on add, it does open up the right-hand side for me. So if I wanted to compare this to my LGT portfolio that I had earlier, I have to admit, I don't know whether that's part of the 40 to 45 or 65. I just picked that completely at random. So whether it's outperformed it or underperformed it probably won't really mean much, because I don't know if that's part of the sector. I should have checked that, or I could check that quite easily back on the universe. But you'll hopefully get the point. I can very quickly start creating content now on the right-hand side. I've got my sector, I've got that LGT solution, and I can start seeing how well it's done against its sector. LGT's orange, sector's green. But again, full disclosure, I don't actually know if that's the right sector or not, but hopefully you get the point. So I can create content now with the sector on the right-hand side. You'll see on the left-hand side, though, every single sector has a little fact sheet icon. So if you click on the fact sheet icon, it gives you a wealth of information about that particular sector. So very quickly, I can see to solutions as part of that sector, 67 providers. The average risk score is 50. There's 5 alpha managers in here somewhere. Best performers, worst performers, most volatile, least volatile. You can flip that between different periods as well. So you get some quick information in terms of who the best and worst performers are. The performance tab as well gives you the performance of the overall sector, cumulative, discrete, rolling monthly volatility, and also looking at the fund size. Providers are starting to provision us with their fund size data now, or MPS data, size data. So you get the biggest MPS solutions and the smallest. And at the very top here, probably the most important one is members. So, a full visualization of every single model portfolio in that sector, alphabetically listed, risk score, all those crown ratings, 6 months, 1 year, 3 year, 5 year, cumulative volatility, 1 and 3. And again, I can click on these little green arrows and flip them back to the main screen. Can also got the little fact sheet icon next to each one of them. If I close that down, it will just flip them back here. And again, I've got the fact sheet icons here and the alert icons here. That icon, by the way, if I like the look of AJ Bell and I've decided to now start using them from the directory, because they're now going to be part of the propositions that I offer clients on throughout 2026. If you click on that button, it's just a bit of a shortcut to the directory. So I can come straight into the directory now, go to AJ Bell, and permission myself with their full data, for want of a better word, kind of full fat data, whereas kind of the light version I'm using with the universe, again, is there for due diligence to make sure that I'm happy with these solutions before I permission myself via the directory. So that's sectors. Let's go to filters. Filters are really important here. So on the left-hand side, again, coming back to the point I made earlier about the MPS universe being kind of giving you the ability to run full due diligence across the MPS space, nothing does that better than the fund filter. So fund filters have, again, been on analytics for decades. They've been particularly useful to go in there and dive straight into our database and find the best American fund that's achieved X, Y, and Z, or find the best multi-asset fund that has achieved A, B, and C. But now you can dive in there and find the best MPS solution that's achieved Z, Y, X. So if I click on new, build a brand new filter, it will, again, it's dependent on the universe you select. So at the very top here, I've selected UK MPS. There's 1,500 solutions ready and waiting for me to filter on. And now it's just a question of me using the filters on the left-hand side, and slowly that number will whittle down. Clearly there's a lot of filters here. You can expand all of them and go through one by one. If you know which one you want to use, you can just type it in. So if I type in ethical, for example, I've got ethical focus, which shows me where it is, and I can add that across. So again, maybe I'm looking for a decent ethical solution. Okay, there's 363 of them. Performance characteristics, let's go back to our crown rating. Let's make sure there's 4 crowns and above. So whatever sector they're part of, let's make sure they're pretty decent against sector, 4 crowns and above. If you want to make it sector specific, you've obviously got the sector tab. So I can now I only want to look at ethical solutions that have an equity content of between 45 and 65. Also quartile information as well. So let's make sure they're first quartile. Let's give a bit of track record as well. They must have been going for 5 years and they've been first quartile, 5 of those. And I can keep going. I can add as many of these filters as I like, obviously, until we go down to 0. You can look at OCF, you can look at annual charge. You've even got stuff like asset split. So, maybe I'm slightly concerned at the amount of solutions investing in the US. So I want to make sure that the US split is quite low, or actually maybe in reverse. Maybe I'm very bullish on the US. I want to make sure that the solutions I use have at least 30% invested into US equities, etc. So again, I can do that with this. Also, you've got the defensive and growth assets. So I can make sure that I want to make sure that the solution has an equity content or a growth content between a very slim margin, maybe 50 and 55%. So I can do that on there as well. Just using over or under logic. And I can also save that. So if I click on save, I can call this my MPS ethical filter. So I don't have to keep recreating them each time. So that's now saved to the database. That's fine. And if I click on show results, it will show me the 5 funds that have met my criteria. they've met them because they're all ethical, sustainable, and they've all got at least 4 crown ratings, and they're all first quartile against their sector. And if I wanted to run further analysis on them, I can click on the little green arrows and then come back to my main screen, close, and there they are. There's all of my solutions, and again, fact sheets, alerts, and then link to the directory to start enabling myself with that full fat data again. And the MPS filters available for me up here, so that will actually update every day. So at the moment, there's only 5 solutions that have hit my criteria. Maybe for whatever reason, tomorrow there's going to be 6. Maybe in a year's time there's 20. But that filter will. So the idea is you just simply click on edit at any time, just select the filter, click on edit, it loads up the filter, but it will rerun the filter. It won't just be static. It runs the filter and tells you how many funds have met that criteria. I can click on show results and take another look at them. About half an hour into this webinar, just in case those of you that missed it at the very start, there should be a little Q&A box on your side. So if I'm going through any of this and you've got any questions on any of the stuff we're covering off, again, feel free to ask as many questions you like, and we'll my colleagues are waiting again on the sideline to answer any questions that come through. So I think that's most of what I wanted to show in here. I might come back into analytics in a few moments if I think of anything else. The other few things I wanted to quickly cover off, though, the other area of the ecosystem that MPS data is surfaced almost without any restriction at all is in FinExcel. So FinExcel, for those of you that haven't seen FinExcel is an Excel plugin of ours, and it's tethered to both your analytics account and our database, and it basically surfaces any data you like in Excel. There's obviously a lot of people out there that like using Excel, that are very comfortable with Excel, and they just want kind of a data source to populate the data in Excel, and then they can do whatever they like with it. You can start using AI over the top to create many different things. So in FinExcel, the universe is now populated in here as well. So in FinExcel, you click on that little FinExcel ribbon at the very top, add new report. If you click on fund code list, again, those of you using FinExcel will be aware of this, but it's MS. If you type in MS, that's the code for the MPS universe. I can even go via different sectors as well. So I just want to pull the funds from that particular sector. But this request is, look, I want to look at those 1,500 MPS solutions, but I need all of those solutions named with all of the city codes next to each one of them. And there it is. So there's all of the MPS solutions, and there's all of the city codes. Incidentally, obviously there is no ISIN code, CEDAL code, MEX or EPIC code for an MPS. It's a bit of a challenge in the industry. Every single model portfolio has a city code. Everything in the database has a city code. So as something we're in talks with a lot of the different platforms that they can start using potentially are city codes to make sure you are definitely selecting the right model portfolio, because selecting things with just naming conventions alone can be quite tricky. So just bear that in mind. The city codes will work in analytics as well. If you happen to pick up a code, back to that instruments tab, if you paste the code in there, it will find that MPS for you. So you can obviously search for its name as well. But just quickly back in FinExcel, with FinExcel, you can start drawing out as much data as you like. Again, there's absolutely no restriction here other than the underlying holdings. I can't pull out the underlying holdings of each MPS, but you can pretty much extract anything else you like. So I can click on new report, and these are all the different areas of the database. Do you want to look at different fields of data, fund data? Do you want to look at performance data? Do you want to pull out ratio data? Do you want to pull out series return, etc.? So if I just do a quick example here, we could do fund data fields. I want that report to live in this little tab here. What codes do we want to use? Well, I want to use these ones. And the fund code list, let's pull out annual charge. Let's pull out what sector they're part of. Sector MPS. There it is, sector MPS, and maybe crown rating as well. Crown rating number, and run. And run that into these 3 columns here. Again, based on those city codes. Give that a second or two, and again, it's populating that data via the database and analytics. So it pulls that across, and now I've got all of the models, their annual charge, their MPS sector, their crown rating, and I can keep going. Now I could create a new report to show the asset split of every single MPS, or the sector split, or the regional split. I could pull up reports to do the performance table. I want to look at 1 year, 3 year, 5 year. I want to look at volatility and max drawdown and all the rest of it. So I can create as much data as I like, dump it all into Excel, and then use AI or the features within Excel to start building content on top of it. So it was almost like a quasi data feed. And just to give you an example of kind of a finished article, this is something I was actually had to work on for a report recently. This is me, again, using FinExcel to pull out, again, all of the MPS data, fund size, ongoing charges, what the group's called, crown rating, yield, annual charge, asset allocation of each model, the 2025 performance figures, the total funds within the sector, what rank that was part of, the quartile of that model portfolio, 2024 numbers, 2023, 2022, 21, 10-year cumulative, 5-year cumulative quartiles. You get the gist. I've also got exactly the same for a load of unit trust NOICs here as ETFs and those MPS sectors. I've again used FinExcel to pull out the performance of those MPS sectors, 5 years cumulative, but also return series. So if I want to create my own charts on an MPS, on an ETF, on a unit trust or a sector, you can, again, if you click on FinExcel, add new report, series return, you can click on series return, tell it what series you want to pull, and that will give you all of the underlying data necessary to create your own charts. So again, within FinExcel or using AI, I can go and grab that data set, insert recommended chart. There we go. And as if by magic, that return series now creates a nice chart of those sectors. And again, portfolios and analytics can be pulled across sectors, indices, anything in analytics or our database can be pulled together into FinExcel. So that's the other application we've made the MPS universe available in. Let's get rid of that quickly. There we go. So there are the two different applications. The MPS itself serves, MPS universe surfaces. Just with a few minutes left, just wanted to explain the MPS data, not just the universe, but where does the data surface? Again, analytics and FinExcel, that's great. The MPS universe is available through that. But coming back to the MPS data itself, primarily the MPS directory data, how do I move that across the divide into the likes of CashCalc and Advisor Asset? So the MPS data, if I come back to my LGT example here, I should have left it open. If I click on edit and open up the model portfolio again, this works with any portfolio, by the way, not just MPS. This is quite neat. We released this probably about a year and a half ago now. The ability to send this data into CashCalc. So if I'm using CashCalc for cash flow, I should be able to push this data across the divide to do just that. So this is my LGT model. I could have my client portfolio as well, but you've got that little tab at the very top there, export to CashCalc. And if I click on that, it will ask me, being a bit impatient here, should have waited, but if I click on that, it will ask me whether I want to send across the linear growth rate or the asset allocation template. And if I click on send, I won't bother waiting for that because we haven't really got time. But if I do that again, there we go. If I click on create template, it will send that data across to CashCalc. And it would just mean if I go into CashCalc now, if I use single sign-on via Nexus, just go into my CashCalc account. If I click on my clients, Keith Baker. If I go to one of the cash flow reports I've got for a client at the moment, so this is I use this in quite a lot of the demos. It's quite a nice way of explaining how CashCalc works. But if I click on the current cash flow model, client's got, we're projecting over the next 40 odd years. Client's got this big old pension pot, this blue pot. He's going to be working up until he's in his 60s. Then he and his wife will draw down those assets until they run out of money in the mid to late 90s. If I go to the savings pots tab at the very top there, if I have a look at that pension pot we're just using, Keith Baker, if I edit this, you'll see that the growth rate it's using is 5.4% every year. And the reason that is because I've tethered the analytics portfolio to it. So I've taken Keith Baker portfolio in analytics and it's pulled it across the divide, and now it's powering my cash flow. And I can do exactly the same for LGT. So I've got the LGT model in here, that one. And if I click on update pension, I could have created a duplicate to put them side by side, but I can't be bothered with this one. I'll just show you this. If I come back to my cash flow model, it's updated it. So again, it's using that MPS data we've got in analytics. I've just been in analytics creating a load of past performance graphs, potentially looking one way, looking at, look, this is what has happened over the last 5, 10, 15 years against sector and all the rest of it. When I come into CashCalc, I want that same data to be now driving the forecast. So that's the whole purpose of that link. Take the data, bring it across into CashCalc, and when it's doing it has basically an annualized growth rate for every single different asset class. So that portfolio we've just pulled across from LGT has a bit of American equities in there, UK, Europe, emerging, maybe a cash holding, and maybe some fixed interest in gilts. Again, it's got a unique growth rate for every single one of those based on 40 years worth of past data, our data. And it aggregates that together into a unique growth rate for LGT, for Keith Baker, for all your portfolios. Just means you can use a bit of consistency again, whether you're looking backwards in analytics or forwards in cash calc, that kind of T junction. I can use the same data to drive these charts. Cool. So that's how it pulls across to cash calc. Just in terms of advisor asset is our charge comparison tool, particularly useful for pension switching. And a lot of this data is now slowly finding its way into advisor asset as well. So on the left-hand side, there's a couple of features on here. But again, you may remember this. I think about 2 years ago now, we acquired advisor asset, just over 2 years. Actually, it's probably just under 2 years ago. We're pretty much market leaders at platform due diligence and charge comparisons and pension switching, and it was kind of an area and a discipline that our ecosystem wasn't able to do. We did it very lightly, but not anywhere near the level that Advisor Asset could do it. So that's part of the reason we acquired them. It's exactly the same reason we acquired Cash Calc, because they did cash flow very well. Market leaders at cash flow, Advisor Asset market leaders with pension switching platform due diligence. We brought that into our ecosystem, and now that's part of analytics. So anyone using analytics automatically gets those features. It's not an extra subscription. And the idea is, if I want to run any kind of charge comparison, I always say that if I explain this one, it kind of explains that by default, because this feature is an identical version of this. It's just without the seeding scheme. So if I've got a seeding scheme, I want to compare that to a proposed solution. Consolidation switch analysis tool is what you use. If you don't have a seeding scheme, you just want to run a charge comparison on a proposed solution, you use that one. So if you understand how the consolidation tool works, you'll understand how the other one works by default. So I've got a very quick example I can show you here. This is Keith Baker, and most of these fields will be pre-populated, but this is Keith Baker. He's 62. We're going to project it up over 10 years. I can add as many seeding schemes as I like, cross-wrapper, so I can add as many pensions, ISAs, GIAs as I like. You can see that I've added 3. I've added 2 pensions and an ISA. And if I open up each one of these, you'll see how it works. You just simply type in the valuation, who the provider is, and then it depends on how you've got this information. If you've got the projections from the seeding scheme, marvelous, exactly how you're using probably any other pension tool out there, pension switch tool. You can just simply type in the projection rates, the illustration rates, and it will then work out the ROI for you. However, for this one, I haven't bothered with that. I don't, apart from the proposed scheme, I don't need to get the projections from the existing schemes if I have the charges, which I do for this one. So I've just simply selected that toggle and just typed in the charge, and it's automatically worked out the ROI. So there's lots of ways for this system to work out the ROI for you, whether you want to manually type in the projections that you've just got from the seeding scheme, or whether you want to type in the charges. It really doesn't matter. It'll give you the same ROI anyway. But now I've got my seeding schemes. Come back, got my 3 seeding schemes. What's the next bit? Well, the next bit is where do I want this money to go? So I want this money to go into an MPS solution. So I've got Brooks Macdonald already plumbed in. I'll take a step back in a minute and explain how these are plumbed in, but these are hard coded. So I'm gonna put the ISA into Brooks Macdonald low to medium risk, and I'm going to put the pension into Brooks Macdonald medium to high risk MPS. It's aggregated all of the correct figures for me. I'll just throw my advisor fees in here. It does that automatically, and click on next. And very much like most advisors generally tend to work with 1 to 3 MPS providers, obviously most advisors generally tend to work with 1 to 3 platforms as well. So you can configure Advisor Asset to recognize that every single time you run a comparison, you only want to use the platforms you're going to be using. I don't care what Transact is doing, because I don't use Transact, but I might use Transact next year, which means I can alter this so that Transact will appear. So I've configured this so only those 4 providers pop up. But just full disclosure, we have all of the platforms available. And if you don't add any restrictions, you'll get a very long list of providers sorted based on charge. But you add exclusions in there. At any time, I can go to the exclusions tab and say, look, just every single time I run a comparison, I only use Aegon, Aviva, Quarter, and Fidelity. So just show me those guys. I don't care about the other 16 providers. But with this particular example, within a relatively short period of time, right, it's looked at your advisor fee, it's looked at all the projections, the projection numbers you put in, it's looked at the MPS solution itself. It knows the subtle difference in charge between all of the different platforms, because Brooks might be charging that model combination you've used. It might be 53 basis points on Aegon, but because they're using a slightly different share class availability, it might be 55 basis points on Aviva. Advisor Asset knows that. That's why all this stuff's hard coded. It also knows that solution is available on those 4 platforms. Otherwise, it wouldn't have appeared. Fidelity wouldn't have popped up if those Brooks models weren't available on Fidelity. So it's doing a huge amount of heavy lifting for you. Populated into this table, I can see straight away that Aegon's the cheapest based on the ROI numbers and based on the fact that it's at the top. So I can click on Aegon, and then it runs that secondary set of calculations because it now brings into the equation all those seeding schemes. So it now tries to work out the cost of all of those seeding schemes if the client just left it where it is at the moment versus how much it costs the client to move and consolidate all of those assets into one location onto the Aegon Arc platform. And it will then give me the combination of the differences in charges. So we can say, well, look, Mr. and Mrs. Client, if you were to leave it where it is, it's currently costing you 1.39. That's because it's scattered all over the place. Start utilizing some cheaper solutions. Cheaper doesn't mean worse. Cheaper just means cheaper, more competitive. But you can prove that in analytics. Cheaper solutions, you can whack in my advisor fee on top of that as well. And because you're able to utilize those, the tiered charging of the Aegon platform, we can massively reduce your cost down to 1.13 and a hurdle rate or critical yield of 0.26. Interestingly, if you move them one by one, the ISA would be more expensive alone. The pension of ours would be more expensive. The only one cheaper is actually that Royal London pension. But by aggregating all of them together, again, making the most of that tiered charge, it brings them down their parts. And again, if I were to click on next and next again, I can create a big report that summarizes all of those different charges, the charges I'm paying, the charges the MPS provider's charging, and then the tiered charge of the Aegon platform. If anyone's watching this thinking, well, this is great, but I don't use the Aegon tiered charge, I've thought about that as well. We've got special terms up here. You can apply your own special rate. So every single time Aegon, Aviva and Fidelity pop up, it will pop up with your special rates, not the standard rates that everyone else gets. Now, just to quickly take a step back, if I click on the Portfolio Tools tab, coming back to the MPS data itself, the MPS data and the MPS universe and the MPS directory sits in analytics. It can be pushed across into CashCalc. It's available there in FinExcel. Advisor Asset is a little different. When you first log into Advisor Asset and go into the My Portfolios tab, if you click on the Add New button at the very top here, all of those models are hard, again, because it's a separate application. We acquired them a couple of years ago. This isn't really feeding off our database. It's feeding off the Advisor Asset database. So it is a subtly different. So if I click on the pre-configured DFM tab here and click on Continue, it's a bit like the MPS directory, actually. It shows you all of the MPS providers that are currently in here. Admittedly, not 76. This is something we're working on at the moment to get all of them in here. It doesn't cost any money. So there's no reason an MPS provider shouldn't be on here other than just efforts for us getting in contact with all of them and pestering them enough. But if I'm an advisor that uses the Tatton Investment Solutions or the Brooks Macdonald Investment Solutions, I can just click on Brooks. It loads up all of their model portfolio solutions on the database, and all I'm doing is just ticking the ones that I use and click on Continue. And that means that when I go and consolidate a load of assets and it's asking me what models I want to be using, that's why I was able to use the Brooks Macdonald model portfolios back on the selection tab. Super. I know it's a bit of a whistle-stop tour. I think that's most of what I wanted to cover. Just quickly check to see if there's been any questions. Bear with me. I'll stop sharing for a second. Let's go back to Q&A. So as I said to you at the start, guys, this is a new system, so I'm just trying to work out which one of these have been answered and which ones haven't. I'm going to assume this one hasn't. Ben, you've asked a couple of questions there. I think that may have been answered. I'll try and answer this one, Ben, because that hasn't been grayed out, so I assume that hasn't been answered yet. Yeah, that must be this one. So Ben, question regarding Advisor Asset. Are there any plans to permit more than one set of special terms per platform? That's a good question. We have special terms for clients. We have other special terms for a particular client with larger assets. Currently have to delete one special terms. Yeah, good question. There aren't any plans yet to add that. That has been raised before, very much so. So just for those of you that aren't familiar with Advisor Asset, as I've mentioned there, you can go in there and apply a special term to a platform. So again, I'm using Transact, so I can go on there and say I don't get their terms, I have special terms, and I can build those in. But admittedly, you can only do one set of special terms per platform. So if you've got a load of clients over here that have a specific set of special terms of Transact, but a separate part of your client bank have different special terms with Transact, then no, you can't accommodate both of them. As you've rightly put on your the chat there, you have to go in there and just essentially alter it. If I'm a client over here and they don't get the special terms that I've already built into Transact, I have to go into Transact and flip it to a different one. It's a very good point, though, that has been raised before, and never say never. As you can imagine, in FE at the applications with so many different priorities being floated around, it's about trying to find the development resource to go and build stuff that can prioritize the development that assists and benefits the masses rather than a small amount of users. So very good question, but unfortunately that's a very long answer, long answer for me basically to say no, we can't do that. Another question. Do FE have to search for de facto risk level? We don't have any plans to do that. That's been mentioned a couple of times with other people like DT and de facto. No, there's not really. I mean, ultimately we have our own, again, to be honest, if I'm being completely blunt, the ambition for de facto, the ambition for DT, the ambition for ourselves is to create a one-stop shop solution that does everything. So we have our own risk profiling tool. DT have their own risk profiling tool. De facto have their own risk profiling tools. Is to try and create tools inherent within analytics that do those jobs better than the competitors, so to speak. So I suppose my only answer to that would be you can use the risk profiling tools within analytics that do exactly what you're suggesting. Again, never say never. If there was enough demand for those two systems come together and allow you to search on de facto for analytics risk ratings and search on analytics for de facto risk ratings, then yes, that is possible. I suppose my only hesitation there would be the whole purpose of using a risk profiling tool is to have like an end-to-end solution. So I've never really felt it would be sensible to be using a risk profiling tool that is supposedly end-to-end, but then I'm having to latch on another solution to create an end-to-end kind of thing. Again, this is a way for me to create a long answer to a short question. But yeah, unfortunately, no. We don't have the ability to search via different risk levels, only really our own. We are currently rebuilding our risk profiling tool. That should be released in the next few months. We've got a risk profiling tool and analytics and cash calc. It's called the Investment Planner, but we're releasing a new version of it. It should be a lot more elegant, a lot slicker, and again allows you to very quickly search for solutions that are risk profile 3, 4, 5, and have those tethered and tied to the risk profiles to make it again a very slick end-to-end solution. So yeah, more news on that. I would imagine a demo day Wednesday will be set up for that particular feature when we go live with it. Super. I think there were a few other questions, but I think they have been answered. I don't know if you can see. I don't know if you can see this Demo Day Wednesday screen. Hopefully you can. Again, this is a new application of ours. Can I turn that to main stage? I don't want to press too many buttons here. Hopefully you can see the screen here. I'm just saying thank you for attending. Apologies if you can't. That's user error, unfortunately. This is still getting used to this new system of ours. But thank you very much for attending that this webinar. If you have enjoyed this webinar, if you've got a lot from it, if you want to attend future webinars, hopefully you can see the QR code in front of you at the moment in the middle there. Feel free to scan that QR code and sign up for other webinars. We obviously do one every Wednesday, but we do have other webinars we set up scattered across the quarters as well. And also connect with us. So on the right-hand side there, that QR code, I think, is linked still to my LinkedIn account. So me and the team are very active on LinkedIn. We post a lot of content, hopefully quite a lot of valuable, useful content, explaining how to get the most out of our solutions, and also some sneak peeks about what to expect in the future. Over the coming months, what we're going to be launching and releasing, particularly in the world of AI. So yes, feel free to connect with me on that QR code on the right-hand side, and I'll be sharing everything that my team shares, FE related. Super, excellent. Nothing else from me. Thank you very much, everyone, for attending. Hope you found that useful. Have a lovely rest of the day. Thank you.